Hello everyone, testing 1, 2, getting ready to get started on decision matrix. All right, welcome everybody. I'm John Slazas from Dharma Capital Trading. Today we're going to go over our fact-based trading solutions, talk about having a decision matrix, kind of a statistical benchmark that you can always gravitate towards when things get hectic. Where do you go? Having a standardized process is the best way forward. Before we get started, I just want to point out that everything that we're going over today is educational, so nothing that we say should be taken as a trade recommendation to do something. If you are trading, do recommend that you're using risk capital so that you are making the best non-biased emotional decisions. So we have a fact-focused method. So fact-focused, market truths, what are facts? Price structure is a fact. In crypto you don't really have a close, but if you're trading a specific exchange, they're going to publish the previous session high, low, and last. Typically that's based off of UTC time. So those are some hard structural facts. And that's what our analytics are all based off of. So our playbook that I'm going to go into now, all of our algorithms here that we use are meant to find the truth. They're not necessarily supposed to be a trading system, but they're the idea is to find the fact foundation. What is the truth? And so we're going to get into that, and then we're going to go into some practical application. This is our macro outlook, and then we use Bookmap as our microstructure. And the goal of this is to really standardize your approach. So really get your thought process into an if-then statement. If this, then this. And having that baseline is going to make it easier to remove any emotional biases to your trading. And so we've got a 4-step approach basically as we get into it. And the first thing that we want to do, and I'm going to go over on a high level every step, and then we're going to go into live markets and apply this. But I'll just give you a kind of an overview first. And so, as you come in and you're going to trade whatever market you're going to get involved with, absolutely having an understanding of what events may occur, economic events that are on. That's not what we're getting into right now. We're going to get into more of the, when you're ready to act, so you have the general sense of what's happening. And now we need to identify the foundational facts, and one of the key piece is what's the state and its characteristics. So that, what's the context of the market? What's the structure bias? So does that context have structure? And what's the bias of it? So is the market in a trending situation? What are those key structure points that are going to affect that trend? And because we're in a specific state and structure, what are the optimal and hedge strategy themes? So for a trend market, it's a positive trend market. We identify the structure of that trend. An optimal strategy is going to be to participate in that trend. If it's a positive trend, buy dips. It's a hedge strategy theme. Market break structure, or it gives us a false breakout. That's going to be a hedge strategy theme. So understanding what those facts are. Step 2 is we're going to want to identify these facts in real time. So if price action is performing to the characteristics of the state, is it? That's a key tell. If the market is trending higher, is it performing to the expectation of that state? Is it trending higher? If it's not, that's a tell that there's something up. Maybe we're in a corrective phase of that trend. We're going to go through our price map framework, and is the market holding structure within that framework? If it is, that's a tell. Characteristics can continue. If it's not, then it's a tell that something might be up, and we need to consider changing our tactics. And then we need to identify what strategy theme's in play. So is the market in an optimal theme, or is it in a hedge theme? And so the job of the trader, every trade period, is to identify, is the market performing to expectation? Is it holding structure? And the market is going to do one of 3 things every day. And your job is to really identify what phase it's in. If the market's performing to the expectation of the state and it's holding structure, then we want to look to participate in optimal strategy theme. It's pretty straightforward. If the market is performing to the transitional expectation of the state and is breaking structure, then we want to look to participate in the hedge strategy theme. So if the market isn't performing to the characteristics of the market state, and it's breaking that structure, and the market is in a transitional phase, then we don't want to hope that the original state is going to continue. We need to adjust our tactics. And we need to participate in the hedge strategy theme. And so if the market is either going to perform the expectation of the state, or the market's going to transition. And if the market's transition, then everything to do with the original state is not true, and we just have to focus on the transition. And if the transitional action is breaking structure and candle structure, then it's not performing to either. And that's the tell that we're going to have one of these no trade, sideways, linear sessions. So the quicker you pick up on, are we in a hedge theme? Are we in an optimal theme? We're not. They're both broke structure. This is a tell that it's going to be one of those terrible sessions. And it's if that's your only market that you trade, it's best to just if you're an options trader, you can start selling some premium and look for those types of strategies. Otherwise, if you're a directional trader, it's going to be tough. And you really need to see if you want to put capital at risk in those situations. And so it's always the same. It's either an optimal theme, strategy, hedge theme, or we're in a non-event theme. And then we go and we look to execute our tactics using the microstructure. And we're going to, we want to standardize our entry. We can do that with our price map structure that we'll get into. You want to standardize your trade selection, based on what the structure bias is. It's self-evident of where are the optimal places to participate in the market, and that leads into our size management. We want to standardize our size management, and then we can optimize our trade tactics with our metrics. And so basically you get yourself into a situation where it's an if-then statement. If it's this, then I do this. And that's my story, and I'm sticking to it. And if everything is in alignment with statistics of what's more likely to occur, over the long run, that's going to work out. And it's not having emotional decisions. It's sticking with the program. So let's go through this matrix today and take a look at what we've got going on. So we'll take a look at a couple markets. So this is our market grid, and it quickly, through color coding, identifies different states of the market. So the downtrend or bear trend, negative, lower lows, lower highs, positive trending markets. It's going to, identifying markets that are making higher move lows, higher move highs. That's the market expectation. So we're really diving into what's the context. You could use moving averages. You could use, you could take a simple way to identify trend is just to, have a shorter term, medium term, and longer term moving average, and put those up. And if the market's above them all, you're in a positive trend. If it's below them all, you're in a negative situation, and if you're in the middle, then you're in more of a digestive. And it's kind of a real simplified concept of a fact-based indicator. So if you're, let's say, depending on your duration, let's just say you could use a 1 week or a 2 week moving average, a 1 month average, and a 3 month average, and those would give you some kind of a good baseline facts. This is what the truth is. What we do is a little more in depth than that, but we go beyond looking at a market that's in a trending or non-trend state, where we actually want to look at a market. Is this, what type of trend state is it? Is it an accelerating trend? Is it a corrective trend? And just to give you more granularity to the insight of the context. And and that's what we really get into here, is just really talking about, hey, what does it really mean to be in a bear trend correction? We've all traded it, and we've all, and at the end of the day, we recognize it, and this application is providing that at the start of the session, and it's letting you know that, hey, the foundation is this. This is the foundation. Doge is in a bear trend correction. Ether's in a neutral digestion. And we've all traded neutral digestions. Market churns sideways. It's a general market state. The expectation is there's going to be a range that the market's going to gravitate to trade within. We're not going to have good momentum. There's no real bias. It's non-trending. Volatility can decrease. And that's really just a baseline foundation. So that's your state. So we're, the first thing on the list in our decision matrix is define what's the market state. Next thing is to identify the structure. So neutral digestion, what do we need to know? We need to know what that, where are those key structure points? Where are the structure points that are going to really define and say this is the digestive range? And one thing on the state, markets, just because they're in a neutral digestion state, doesn't mean they don't break out. That's kind of the hedge theme, right? That's when, any market that's in a neutral digestion, it's a precursor to a potential breakout. So we have to be aware of that. When the market's digesting, it's consolidating to make a move. So part of this market state that we have to consider is a breakout. Markets that that's part of this state. When neutral states transition, they break out. And so we plugging that context into our decision matrix is important. We need to be prepared for that. But that's the whole point of this, is just having a, if we're in a neutral digestive state, we're going to look to fade moves until we're proven wrong, and then there could be an opportunity for a potential breakout, and we want to make sure that we're in alignment with that. And so what we do is we identify that structure, we identify the upper lid of that digestive action and the lower trough with our, what we call our upside pivot, downside pivot. So we create this critical range. But what we also do is we have a sentiment bias. What is the over-under number for the day? What's the balance point? There's a lot of names for this, inflection point, and we call it our reversal level, our R level. And basically we're buying breaks above that price, selling rise below it. But what this does for us with the neutral digestion, it identifies that, hey, momentum's positive above the lower trough. So the market's digesting, but it has a positive bend. So the expectation is that if it is going to break out, it's more likely we could see a positive breakout. Also, if the market breaks out to the downside, we could see some pretty emotional energy, because this is where the energy of the market is right now for Ether, is at 1701. So this helps to skew the sentiment. This has given us a little skew to our state context. So the context is neutral, but now we're in the structure of it is positive off the lower band. So if we're looking in terms of size management, and we're just as a general piece here, hey, buying breaks is going to be more valuable than selling rallies. Selling rallies might be a little porous. We could push through that and search for that upper lid. Versus on the downside, if we're getting an opportunity to buy, it's going to be something that might be more hard set. We'll give that a hard floor. And so this commentary is just really just going through and defining, hey, this is the context. Well, this is how the context is skewed because if sentiment is below the market. And other markets, will be in a neutral posture, but the sentiment may be balanced. And this is a classic situation when the market's really coiled up. So Filecoin is all really coiled up, whereas Ether has more of a positive tone in neutral. So it's just the slight differences that make a big difference. And it helps to identify really what is that structure. For Bitcoin, it's different as well. So it's the same state, but the structure is a little different. And in this state, you have the sentiment bias that's outside this critical range. So it actually creates a more of a support band, versus Ether has a hard low point, versus Filecoin is really on the fence. It's pivotal, and things are really wound up for a move. And Tron is in neutral as well, but its sentiment's above the market. So sentiment's going to be key, and it is the most valuable point of the session. If you're only going to trade, if you're really risk adverse and you just want to look for where do I place my biggest bets? Well, I place my biggest bets at sentiment, because that's where the energy of the market is. That's where the big decisions are. That's where all the real money cares about something for the session. All the big money is, their short term is quarterly outlook or monthly. The only thing they care about the day is really the closing price and the sentiment bias. Where is sentiment potentially going to shift that I might need to hedge or do something? And so that's the main focus of most of the money, is off of sentiment. And that sentiment is going to skew the structure of the state. Well, since we're in this state and we have this structure, what are the optimal and hedge strategy themes? Well, some of this is it's pretty obvious when you go through the truth and you see, and you're talking about a market that's in neutral, that has a sentiment bias below the market. What's the best thing to do? The best thing to do is going to be to fade momentum into that lower trough. This isn't meant to be rocket science. This is meant to just identify market truths and facts and what's more likely to occur. And that's what it's doing here. It's identifying, hey, this is sentiments off the downside pivot. That's what our DP is called. And if the market's going to perform to the expectation of the state, any weakness is going to bottom out here, and it's going to make a play for the search for resistance, search for the upper structure. The other optimal strategy theme is going to be a sell UP reversal, or a reversal strategy where the market goes through the upper structure because sentiment's positive, it gets excited. It's not going to be as hard, but it's going to exhaust, and it's not going to be able to hold that, and it's going to fall back into neutral. So we call that a reversal. So it gives you a false breakout to the upside. So whereas on the downside, we're anticipating the market to bottom out in front of the figure, on the upside, we're looking for that an exhaustion, kind of in alignment with this positive action, and we get an exhaustive reversal. And if the market's so then what happens? If the market starts to transition and it's going to move away from being neutral digestive, maybe it's going to start trending. Maybe it's just an expansion of the neutral range, but those tells come when we breach these parameters. So if we're breaching the upper band, or we're breaching the lower band, those are going to be breakout signals. And typically a breakout signal to the downside off sentiment would be sharper. You'd expect more of an emotional move because this is where sentiment is, versus the upside. And so an upside breakout, the key with that would be the market needs to hold positive structure. But those are our themes. If the market's performing expectation, it's going to be an optimal theme. If it's starting to transition to a new state, it's going to be a hedge theme. And if they're not holding structure, then that's going to be a tell that we might be in for one of these difficult sideways days. So we've identified the state, we've identified the structure, and we know which are the optimal and hedge strategy themes. And so now we're going to look at some real-time facts. And we're going to see if the price action is performing to the characteristics of the state. Is price action holding structure? And is there a strategy theme in play? Let's get this set up here. So these images are showing us the expectation. Here's the key structure points here. The midpoint of the critical range is what we call our directional, and these we have some what we call interior price levels. These are really for position management. This is the main structure, and these other levels are supportive. If we're getting a breakout of the critical range, we're getting here are the targets. Where can it go? Upside and downside. This is kind of a head fake high, head fake low. We call it our critical range extreme, negative, and positive. And these are validation points. So if the market is transitioning from this area up to this area, it's going to have some validation that it's going to need to accomplish to do that. And so let's just take a look at what's happening in Ether. So the expectation in Ether is sideways. Let me so here's the upside pivot and the downside pivot, which is also sentiment. We're talking about fact-based trading. What's your fact foundation? A good thing to look at is just, what was the previous day's high low? The net change off the previous day's close is important. But also the previous day's midpoint. It's a great momentum number. And these are just simple, straightforward facts that the market is going to react off of. So if the market's coming up to the previous day's high, you should know it. If it's trading below the previous day midpoint, you should know it. So we simplify that with, this is something we just draw in our charts. I draw my chart. You can too. Previous day's high, previous day's close, previous day's midpoint, previous day's low. So, we have this, this data before we start the session, and this is UTC time. And so the directional is a kind of a pivotal level within the critical range. And so what we're doing now is the market performing to expectation? That's what we're looking for. This is identify if price action is performing to the characteristics of the state. Yes, it is. It's digesting. It's trading sideways. And it's actually trading sideways within this interior, the interior consolidation extreme. So that, this is a little bit up until this point here, the market was really kind of winding up. So yes, it's performing to the expectations of a neutral digestive state. Observed price action within the price rank framework, is it holding structure? Yes, it is holding structure. It hasn't violated the neutral digestive extreme parameters. Is there a strategy theme in play? So our main optimal strategy theme was to buy the DP. So we were looking to buy the market here. And here, this is the upper metric. We call this our alert distance. So this is the figure, and then this is the boundary surrounding it. And as a rule of thumb, you want to keep your signal acceptance within the boundary of the metric, because this is defining the structure of the state. And so our optimal strategy was to buy a dip above here. And also the expectation was that the market was going to bottom out above here. Well, the market didn't go to our figure. And it doesn't always occur. This is called being patient, and yeah, we missed this opportunity. However, if we just look at structure and price action within structure, we definitely can get some insights. So these opportunities are the best. They're not the only ones. Okay, and so they're ones that if they do occur, you definitely want to bet bigger. So if we just look at the facts, and we start the session out, we know the previous day's high point. We know this is a validation point as well on the structure. We know this is a pivotal number, classic pivot point within this bigger structure. We know this is sentiment, so we know that the market has a propensity to, any trade below here is corrective with this expectation, a rally. And so if, just using this other, the previous day's price action, it gave us some insight to catching this move. So how do we get that insight? Well, the market comes up and challenges this area and rejects. One thing that we know, it's part of this optimal strategy theme, and as you get in, study more of what neutral digestion is, what the critical range is, a classic digestive scenario is the market tops out here and bottoms out here. That, it's a coiling. So is this basically, this range is it tells you the range is contracting. And that'll happen. And so here we have the market goes below the previous day's close, trades below the directional, which is a sign of weakness. You get this price action that validates that this is a good structure point. And then the market comes down to the previous day's midpoint. Here again, we're getting a little bit of reaction. So, if you're really trading shorter term, this structure is giving you insight to manage your opportunities. This kind of validation that the market is concerned, it's using the previous day's price points as, reaction points. The fact that this midpoint is in the middle, there's no structure associated with it. This is where support and resistance technical analysis fails. Everyone's coming in and looking at, the market bottomed here, it's going to base here, but it's not happening at a structure point. And the structure point is what the big money is looking at. They don't, when support and resistance works, it works because it's aligned with structure. And when it doesn't work, it's because it's not aligned with structure. So you do have this price action occurring around this midpoint, but it's not in alignment with any larger term structure. And this is just the daily structure. There's weekly structure, monthly structure. And so then you have a retest of the close. We have a failure here, and then we get a failure here of this metric. we're looking, and we are definitely buying of this break, but it doesn't give it to us. And so the fact that we went below here and then we traded back above it here and we based here, this is a bit of a tell of that reversal. So instead of getting the, an exhaustive breakdown to here, the market has given us a failure. Back above, it's stabilizing, and this is a reversal, and then you get a validation where you move back above this midpoint. And so, and then, then you get the retest of the close. You get the, it presses the lower end of this metric boundary. So it really, stabilizing here. And then again, you're getting that transitional signal above the previous close, and then you get a breakout above this metric. So this is all, this is just insight into observing price action within market structure. And so now we're back at the previous day's high. So is a strategy theme in play? Sort of. We're sort of in a buy DP fade theme, because this is corrective and we're in this theme. So if that's our story and we're sticking to it, and the market, and if we're coming into the market right now, this is where that signal occurred. Here it was completely validated. This price action up through here is positive. Where should this market go? It should go here. What does it need to do? It needs to base above 1750. It needs to stay trading above this previous day high point. Or is this just another reversal where it's just the market's going to fall back into a non-event day? That we do have some news coming out. So we've got, let me pull that up. So tomorrow we've got Powell testifying. So that's coming around 10 Eastern Standard. So maybe the market is done for the day and it's just going to wait for that. Could be. Right now the tell's 1750. If we can't base above here, it's over. And that's in alignment with our decision matrix. We've identified, is there a theme in play? Yeah, there is. We're somewhat in the by DP fade. Is the market performing the expectation of the state and holding structure, and then look to participate in the optimal strategy theme? Okay, well, the market already made its move there, and we could, if we're going to participate in it, we could catch the very end of it. And we don't have, the market is holding within, so there's no hedge theme in play right now. And so, are we going to potentially be in a no trade situation? It seems what we might be gearing up for. So if the market can't hold above 1750, it could easily just break all the way back down here. If it did that, that would be a big buy. You just have an event move here with the expectation the market's going nowhere. If the market starts to stabilize above here, then we can look for a move up to this level. So now we can take a look at the microstructure and see what kind of insight we get from the order book and our micro events. And so, if you only have, so now all the tactics that you've learned and that you used to trade, now you have this structure foundation behind you to help you to help you make those decisions. You have the fact foundation. So whatever you're using and however you use your order book and order flow analytics, you want to have that macro picture. It's a game changer because it really gives you that clarity. Then you know what to do. And so, just knowing that we are, the market, you've got alignment with the previous day's high point and this structure validation point at 1750. And currently we had some excitement here, and look at all these. I like to watch just what clip size is coming through. to get a sense of, momentum. And here we have the order book building up a little bit off the lower metric. And so this can be a tell of exhaustion, and especially if we break structure here, we take out this low, we come back and we start to build negative, price action. That could set up a play for a move back down to the previous day's close, if not the midpoint. Again, is the market performing to expectation? It's going sideways. So today was a day that the expectation was more likely to be not very interesting. Sticking with the, looking for alignment like with the previous day's high point with structure for opportunity, and using your tactics with the order book. Those are the kinds of alignment, and then that you want to look for, and you want to use structure to give you insight to duration and to your targets. Let's take a look at Bitcoin real quick. Oop. So we know that Bitcoin is in a similar market state. It's in neutral digestion. But sentiments below the market as well, but this one is at the CRX minus. So it's just a little different. Let me get that to update there. So in Bitcoin, we had the market actually tested the upside pivot. So it tested that metric. So that was performing to expectation. Then it broke down, and we knew that the bigger structural support is down way below the market. This kind of area, and we had our previous day's low point. So this kind of zone was the big buy area. This is where your big size is. And here you had a test of this area. The market starts to go lower. It's kind of stair-stepping. You could look at the price map structure as a ladder. And this is what when you're observing price action within structure, when you get a failure, so we get this failure below this pivotal point, below its metric, below the previous day's midpoint, these situations spark these situations, false failures. So in understanding the context of what's happening, where the market is, this market is in neutral. It gives you a negative signal that should rotate lower, and it doesn't. And so when you get this signal and the market reverses and gets back above the previous day's close, it gives you an insight that the market's going to, make a retest of this upside pivot. And why would it go? Why would the expectation be that it would go higher? Because the market told us here it already went above the previous day's high point, so it already took that out. So in a neutral digestion, if the market's either going to break out or it's going to search for a new upper band, a new upper lid for its neutral digestion. And in this, one of the optimal themes, because sentiment was below outside the critical range, was a sell UP fade. So instead of looking for the reversal, it was a hard fade. And the hedge theme is a buy UP breakout. So the sell fade paid out. We call this the price distance between two major price map levels is a 1 APMD. So that's kind of your minimum target. And since sentiment's below the market, this is a sell against sentiment, so it's corrective. And so that theme paid out. Then when the market, then let's put the validation points on. So the market's still working lower. Now the market tells us it wants to go further lower. But when it does this, it breaks structure of that fade. And absolutely in this here, it negates the fade. Because if the market was going to roll over completely, it shouldn't have gotten back above this price. It definitely, now it's telling us there's an issue with it. And then here we're getting a transitional buy UP breakout strategy theme. So now as we're observing price action within market structure, in the context of the state, Bitcoin is no longer in a digestive mode, it's in a hedge theme. So it's in transition. So what's it transitioning into? We don't know. We won't know, on a daily basis, what's the structure going to be tomorrow. It might be just an expansion of the range. We could be transitioning into a positive trend situation, or it just could be a big positive shift into neutral, a bigger neutral shift. But what we do know based on structure is since the market broke out of the upside pivot and it validated above the critical range positive, that it should at least come up to this point. That's our minimum 1 APMD move. Since it's a breakout of the critical range, what else do we know? We know that the target objective is 2 APMDs. So that would bring us up to 28,140. So based on the facts, the market's made a new high for the day. We've broken out of we definitely are not in consolidation of neutral digestion. We're in a hedge strategy theme. And so we're looking to participate to get on board with that hedge strategy theme, which is a breakout. The market attained its first objective, so it already paid out a full APMD. If this rally is going to continue, any pullback should base above here. We shouldn't trade back below 27,400. And if it's really aggressive, it's going to maintain structure above the lower metric here. So it's going to start, you'll see it potentially base above 27,620. Because that would be an acceleration. Also, if the market does continue to just go linear here up to this area, this would be an exhaustive potential situation. So you definitely, if you're long the market, having resting orders in this zone. So if you do get one of those big spikes, you're going to anticipate it, because that's the natural breakout target of a critical range is a 2A PMD move. So this is Binance Consolidated Order Book with Bybit and OKX, and this is the USD Coinbase, Kraken, Bitstamp, Bitfinex book. And you can see there is some liquidity starting to build up here at the upper target. So when as most of you are proficient in the moment, in the microstructure, and so this is basically your macrostructure, statistical baseline. This is your benchmark. As you're making decision, this is giving you the bird's eye view out of the forest, and you're in the trenches. And what this is going to allow you to do is it's going to help you to standardize your entry. So when you're looking for your signals or your opportunities, is it valid? What's it worth? So it's going to help you to standardize your trade selection. So when you're in this specific state and structure, this is where I really want to participate. Here's some other, and then being able to identify, really understanding what those themes are of, and it's this structure bias. Here's where I can jump on a situation. And standardizing your size management is really paramount. So knowing when to bet big, when to bet small, when not to bet is huge. That's all the difference in the world of longevity and trading. And then using those metric boundaries to really dial into that microstructure. And when the market's not in those metric boundaries, to understand that it's hard to really define the risk when you're outside the structure of the market. It's more expensive, it's riskier. That's where all the algos really have a lot of sway, because there's no funds that are really looking to participate. The funds are looking to participate where in structure alignment. And when markets aren't in alignment, it's just free game for predatory algos to just pick you off and just to squeeze you and go nowhere. So the solution is fact focus. Anytime you question where you're at or what you want to do, dial it back to the facts. We've got a great tool for that. Otherwise, you want to at least understanding where's the market in relationship to the previous day structure. The simple fact is going to be a real powerful baseline. Is when you're making your decisions. If the market's trading below yesterday's low, it's trading below yesterday's low. If you're buying the market, you need to be careful. You're going against the grain. You're going against what's more likely to occur, and you need to know that. So if you have any more questions, you can feel free to email me directly. You can also I do post on Twitter often. On Bitcoin and other crypto markets. We have a virtual trade room we're getting going on options trading, and you can come to the dharmacapital.trade website and take a free trial on our playbook application and our chart overlay integrations. And one of those integrations is with Bookmap, where our structure is going to come up right on the heat map. So you'll have that right in your eyeball. Well, thank you for your time today. I look forward to speaking with you and working with you. Enjoy your day. Cheers.